Good afternoon, everyone, and welcome to my platform. Today on financial accounting, the topic we're looking at is a sales journal. Sales journal is one of the subsidiary books. I still remain Author Saint Vinn, the author of mathematics, accounting, finance textbooks. Sales journal is a book that records all goods sold on credit. You can call it sales day book, you can call it sales book, you can call it sold journal, you can call it sold day book. All these names are all the same. It shows that there are times you will want to sell to people on credit. That means you are selling to them and you are not collecting money at the time of sales. You are leaving them, giving them some grace to pay later. For you to keep records, you need to prepare what we call sales journal to record all these goods you sold on credit to numerous customers. You are the one selling. It shows you are a seller. You are a creditor. The person you are selling to is a customer or a debtor, as the case may be. When you sell, you are giving out. Your account will be credited, which is the sales account. And the person you are selling to is receiving. His account will be what? Debited. That is the principle of double entry, propounded by Lucas Pacioli in 15th century. Without wasting much of our time, like I said, sales journal is not an account. It's a book. It's like a diary where you record transactions concerning goods sold on credit. I tried to draw something here. This will be our dates. This will be particulars, folio, the details and the total. It's a book. It's like a diary. It does not have, some will say, names and particulars. There's nothing wrong. Here is folio. Here is details. Details. There's a naira symbol here. Here is the total. There's a naira symbol here. So all I need to do here is to write the owner of the account. I'll write Sandy Sales Journal. Sandy Sales Journal. Now that means that Sandy is the seller. Sandy is the one selling to numerous customers. On November 12th, Sandy, the seller, sold to John. That means that John is receiving. All we just need to do is to write the date, November 12th. We'll write John. When we write John, the things that were actually sold to John will be copied in at, bottles of 7-Up at 10 naira each. 8 times 10 will be 80. But because there is no other one to add here, I just go straight and put it here, 80 naira, no cover. I close that transaction. It shows that on November 12th, Sandy, the seller, sold to John goods worth 80 naira. And John has promised to pay later because it was sold on credit. If there are more transactions, I would have added. There can be 3 or 4 transactions, in that was sold to goods that were sold to John. On November 20, this same Sandy, the seller, the owner of this account, the supplier, decided to sell again to another person called Olaniyi. Olaniyi is a customer, is a debtor. In this case, what are the things that was sold? 4 bottles. 4 bottles of Maltese at 20 naira each. You multiply 20 times 4, that will also be 80. I put the 80 here because The question has made us to understand that there is a trade discount. So I'm going to less the discount. Trade discount, 10%. Trade discounts. 10% of 80 naira is 8 naira. You subtract, transfer the money to this side, that should be 72 naira, no kobo. You close the transaction like this and add up everything. That will be 152, no kobo. You close it by drawing 2 lines. You close this side. Let's believe that November, at the end of November, let's say 30, that all the goods that were sold on credit is sales account. And it should be credited because Sandy is the one supplying. Sandy is giving out. The double entry means that we're going to credit it. We're going to debit John. We're going to debit Olani. From what you can see on the board, that is how to prepare sales journal. Sales journal. If you look at the question very well, Sandy is the person that sold the goods. Sandy is the seller. Sandy is the supplier. Sandy is the creditor. Sandy on November 12th decided to sell goods to John. John is the customer. John is a debtor because he's owing, promising to pay at a later date. John is also a customer because he patronizes Sandy on that particular day. On November 12th, we write John, 8 bottles of 7-Up at 10 naira each. 8 times 10 is 80. We'll put the value there. On November 20, this same Sandy, the seller, decided to sell to Olaniyi. And what are the things that was said? 4 bottles of Maltex at 20 naira each. 20 times 4 is 80. And 10% because discount was given for that credit facility. Discount was given to that person. And 10% of 80 naira, 10 over 100 times 80. Or you press your calculator, you have 8 naira. When somebody gives you discount, it's a reduction in cost price. Take away 8 naira from 80, we'll be having 72. That means in the month of November, all the goods that Sandy sold on credit amounts to 80 plus 72, giving us 152. So all the goods, so that's the total sales. Remember, sales is made up of 3 types of transaction. Goods sold on credits, goods sold by cash, goods sold by check. So all these are all sales. Whether it's on credit, whether it's on cash, whether it's on check, by check, they're all sales. So this is what we call sales journal. The question did not stop there. It's a post to the ledger and extract a trial balance. Post to the ledger and extract a trial balance. So that's simple application of double entry. If you look at what I've just told you, we sold to John. John is receiving. John account will be debited. This is our debit side. This is our credit side. So, because we sold to John, John is receiving. We write November 12th. I'll write sales because from sales journal. And the amount is 80 naira. We'll close the matter like this. The next one is Olaniyi. Olaniyi account. We'll have credit side. We'll have debit side. November 20. We sold to Olani. Olani is receiving. We write sales. The show is from sales journal. And the amount is 72 naira. We'll close the matter. And there is it. And after that, the next thing is the sales account. This sales account belongs to Sandy. And that means that Sandy is receiving, Sandy is giving out. And for every debit entry here, we'll have November 30. We'll write the word sundry. Sundry means various credit transaction amounting to 152 naira, no kobo. Remember, John account, Olaniyi account, John account, Olaniyi account, sales account represent the ledger. And after posting to the ledger according to the question here, it says you should extract a trial balance. Trial balance, like you know, is a list of all ledger balances. If the ledger is debited, the trial balance remains debited. So this is a sandy trial balance, just to check for arithmetical accuracy. So here is the names of account, not particulars, that's an old story. Names of accounts. And here is folio. Here is our debits. Here is our credits. If the ledger is debited, the trial balance will also be debited. John is debited. Olani is debited, 72. Sales is credited, 152, because sales is income. Incomes are always credited. It has a credit balance. On the same line on your book, you have 152. Ladies and gentlemen, that is all we can take for financial accounting. Today, we've been able to deal with sales journal. If you have any question, you can call the author of Mathematics, Accounting, and Finance textbook for more questions. Put your questions in the comment section. Call for tutorial on financial accounting, cost accounting, and other related subjects like mathematics and so on. God bless you. On that note, we'll continue next time.